Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein with your weekend edition of your metals market update for this Friday, July 20th, 2018. Markets are all closed. I'm going to hold a live webinar this weekend. Want to talk about the metal markets, what the president's impact of what he said, because yesterday when he criticized the Fed, saying that, every time the economy gets strong, they raise the rates, and the dollar, it doesn't help us to get this strong of a dollar, blah, blah, blah. Well, the dollar drops. The metal markets rallied off of it, but was it no more than a relief type issues and not real trend changers? That's what you got to look at. Down day in stocks, we had a bunch of companies for the first time report that they didn't get such stellar earnings, but we'll see what happens as we get a lot more coming out this coming week. It doesn't seem to be a heavy week of economic data. I was looking today and just not seeing a lot of that. When I look at the monthly chart, more than ever, just look at how this market keeps spinning in these jet black bands. Those are called the Bollinger Bands. And this market has been caught in these since really beginning of 2016. Market came off the lows in 15, went to that high, and has up until now not been able to get back to a lower Bollinger Band all these different months. This was the first big break where it could get down there. Got this week as low as 1210.70. The lower Bollinger Band came in at 1220, and then the market spun away from it, finishing off at 1231.10. Okay, but still a big break and still carrying the market. Look at how much down. So by the time you went from the low to the high, you've taken this market down really about $1.35, $1.40. It's quite $135, $140. That's a lot. It equates to about a 10% break. 10% breaks are an interesting spot in futures because when you get beyond them, adding to that becomes very, very difficult. And since it's been a one-way street, just something for you to think about. Now, there is nothing, and I don't want to give you the impression that suddenly I was getting friendly on these charts, because that's not what I'm saying. When you look at the weekly area chart of closes, fine. When you go to the weekly bar chart, any way you want to look at it, the market's still down $10 for the week. When you take a look at the swing lines, you still have the pattern of lower highs, lower lows, and to break that pattern under the current formation, you have to get over 1266.90, roughly $35 higher. Where's the market trying to hold? This gets a little exciting again. The 200-week average of closes, yes, it went through it, but yes, it also came back to it. It did the same back here. And that's where the market was grabbing its footing. So I have areas on the chart that give me reason to believe that I'm in a zone where there's value to the market. Now, will it fall apart from there? Don't know. Is there a bullish story? I don't see one. We're just at a value area. When you come down to a number that's a support and go through a number that was a support, like the 100-week average, old supports become now resistance. So you would look for resistance in this 1271 level, the 100-week moving average. The other combination that worked for gold, besides the president, was the combination of Bollinger Bands meeting up with that 200-week moving average of closes. I said day, 200-week moving average of closes. They came in and they did offer support. If the market gets all under that, that becomes a new problem. But the first challenge was successful, and I'll bet there was some short covering in that market. In terms of momentum, it is still locked into the downside. I don't consider momentum to get overbought or oversold on weekly charts. I do on daily charts. So in summation, you have a downtrend since you have a pattern of lower highs, lower lows. You have hit key targets of the 200-week moving average of closes, the lower Bollinger Band. You held them. Now we'll see what's in store. When you come to the gold-silver, I call it ration. That's interesting. It just dawned on me. Ratio, I'll change that. Even I'm laughing at that one. You're still over this 200-week moving average of closes. Traders will look at this, and eventually when you get under it, they'll say a major shift has happened. Just the way they did as the market stayed above it just about all this time. Do you see what I'm getting at? Here it flirted with trying to get something going, but I'm going back here an awful long time. This is 2015, 14, and you were over that average. So that just gives you an idea how long this has been in play. When we come to GLD, the popular ETF for gold, the momentum is locked in. The market has got the pattern of lower highs, lower lows. The market finished off the day at 116.56 over the lower Bollinger Band. So it's riding it. That's what you call it. It's bearish. You'd have to get over 119.75 to say maybe something else is going on and the market's not as bearish as it was. In GDX, I was looking to see if support would come in at the lower Bollinger Band. That number would be 2171. You got through it. Today's low was 2148, and you settled over that. So now, what else? I'm going to repeat again. These are the formations you get excited about. From sideways formations and really long ones are when eventual trades come into a market, just like that gold-silver ratio, that you want to jump onto and not get out of quickly, because it's either going to be a top or a base, and because it's years long, it's going to have a lot of power. In the silver chart, you can see how you had one rally that failed up at the 100-week average in the Bollinger Band. It was a trap, actually. And the market just immediately reversed course, and in weeks, not many, the market just collapsed down to a new low for this whole break. Give you an idea how much. You went up and you hadn't been this high, 1735, failed, and I think you'd agree, right here at the 100-week average, was in a narrow Bollinger Band. I figured, well, maybe it'll try to low side then, see if it fails there. It didn't fail. So it's gone from 1735 and carried the market down to 1513. Pretty big move. Lower highs, lower lows. With the close at 1549, you're still under this week's lower Bollinger Band. So you're out of it. The odds favored will try to get back into it. But folks, this was sideways action that it just broke out of. There's nothing I can find friendly on this chart. In the copper market, copper came out of this basic sideways action up here, broke down, went to the 100-week average under the lower Bollinger Band, week 2 under the lower Bollinger Band, week 3. Now, you only 5% of the time stay under. So I give next week a 2% chance of staying under, the week after 1. I'll count each successive week. Weeks is one of those. Momentum down. It never did get into a trend. Sure, the bias crashed on you. Everything came apart when you got under that 18-week average again. But silver and copper had this head fake where they tried to break out, didn't do it, and the punishment to the downside has been monstrous. You're beating up the auto industry. Platinum, palladium charts. Just look at what's going on here. Look at what's going on here. And that's what you're into. You're into anything in that. If the tariffs are going to go on and these tariff wars, and you're telling the average person on the street their car value is going to go up $1,700 to $7,000 because of tariffs, how many of us are not going to get a new car right away? I'll be one of those. Just because of a tariff, wouldn't have to do it. Cars today are built pretty good. If you're getting a new one, it's because you want it. You don't have to have it typically. And there you go with this market to the downside. In the dollar index, if we take a look, the market made a run for the 100-week average, backed off, still has the momentum bullish, still has the pattern higher lows, higher highs. Market got talked down on Thursday by the president, which is an unusual event. He talked about the Fed's policy, and he doesn't like the strong dollar, doesn't think the Fed has to go ahead with these interest rates. Presidents aren't supposed to do that. They appoint the people that are on the committee, the reserve board, if you will, and those people they're appointing are supposed to be in line, if you will. That's why the president appointed them. Okay? But after they're there, they're independent. So I wouldn't get all bent out of shape that the president said that, nor would I believe that the influence from it is going to be long-lasting. In any case, I want to remind you about our research. We write for commodity traders. Now, I've been around this a long time. You know, you go home on a Friday, and if you don't get a Barron's in the old day or a Wall Street Journal, where do you get any market information? Go on most websites over the weekend, they stop writing on Friday about their market research. We don't. Our writers will be here tonight. Our writers will be writing tomorrow, and you'll get the people certainly for Sunday night writing. They're getting you going on the markets. And that's what you need. You have to have an idea. Give you an example. There's a cattle on feed report. What's it mean? Do you have any idea? Maybe you don't trade cattle. Trade energy? Baker Hughes lost 5 units. What's it mean for the marketplace? We'll be writing about that. We'll be writing about comments about what the president said. We'll be writing about, in other markets, the sugar, the cocoa. So if you're interested in this, we provide this to our clients, and it's a free service to our clients. So how do you get it? We'd like to show you what we do. Take a free trial with us. It's that simple. How do you get it? And by the way, it's an email, so it goes anywhere. You call us, or you can go on our website, and you call us at 866-973-2077. On our website, you'll see it at www.iraepstein.com. You can pick the categories you want to get the information on. We'll make certain that it starts coming into your mailbox. We want your business. It's really that simple. You can always click up here if you're watching me on YouTube, and it'll take you right to that page. Have a great weekend. I'll see you all Monday.